Ladies and gentlemen, welcome to Insurance Town. I'm the mayor, Heath Shearer, and the host of this podcast, and I'm pumped you're here today because I got a great conversation lined up for you. And I've also got some great sponsors who love being a part of this show for you, the citizens of Insurance Town. They love you. Smart Choice, the fastest growing agency network, hands down. They have agency-friendly contracts. 10,000 agencies countrywide that work with them. They also have $11 billion with a B in premium. That's a lot of weight to be thrown around. Carriers love them. Agents love them. Their tech partners love working with them. They want to roll up their sleeves to help you to be the best agency you can be. Go to smartchoiceagents.com. Everyone loves them. Make sure you do too and check them out. Also, my good friends over at Canopy Connect. Oh my gosh, I love them. Whether you're talking to Nick or Ray or Tolga or Casey or any one of the great team members over at Canopy Connect, make sure you tell them that the mayor sent you and get your discount and get your demo to find out how they are the one-click solution to getting all things that you need to quote your prospects, whether it's loss runs for commercial or personal, whether it's the deck pages, driver's list, you name it. They can get a hold of that with one click. They are the one-stop shop for you for the intake process. Also, my friends over at Old School Marketing, handwritten direct mail pieces. They do email marketing. They do the whole nine. Go to oldschoolmarketing.com, OLDE schoolmarketing.com. I'm going to jump out of the way, guys. Check out this conversation with Eric Stien. Eric Stien, my brother from another mother. How are you, brother?
Good, man. Good to see you again, Heath. How you been?
Man, I am good. I am really good. How's empty nest life treating you?
Oh, man, I'm loving it. I mean, I've been looking forward to this for quite some time. I got two girls, as you know, and so there's a lot of estrogen in the house. Even my dog is a female.
Oh, man, I hear you. I got two daughters as well, and my son. We have to stick together on that. So, I get it, man. The animals are girls too, and my wife. So there's a lot of estrogen in our house too. But so you got Ohio State,
and
then the other one is
Miami.
Man, that's opposite ends, man.
Hot and cold, you know.
That's right.
Well, they're hot. Well, Miami's doing great. I'm a college football fan, as you remember, and so they're both doing great actually. University of Miami's doing great, and Ohio State. But I did get to go to the Horseshoe for the first time for Parents Weekend already. And that was a cool experience. So
yeah. So you're in Florida right now?
I did. Yeah. So this is our testing of staying in a home that we rented for on the beach for 10 days because we can. Brought the dog with us, and seeing how that feels. Had some other couples come in for the weekend. Then they left. So now it's just us. We just want to check it out, see how it is traveling like this and working.
I guess our invite got lost in the mail, so I'll wait for the next time you rent a house, and I'll come down and hang out with you.
Yeah, absolutely. It's no charge too, man. That's the beautiful part. I got new friends now when I say that,
Oh, I bet. So yeah, talk to me a little bit. Let's let the audience in on who you are. Let's take a walk down memory lane. Tell you a little bit about who you are, and let's lead me up to where you are today.
No, absolutely. So again, thanks for having me on. I really appreciate that. So basically, my background, 25 plus years in property and casualty insurance. Started my own agency called Insured Solutions around 2009, so about 15 years old now. And about 5 years ago, we actually ended up getting a private equity partner, Stone Point Capital. So a very insurance-centric private equity group. It's been a great experience so far. They've really sort of, hands off. And I know, a lot of the folks like that these days doing acquisitions in our space are letting the agency just sort of continue to do what they do, which is really great. And anyway, then recently, as you know, wrote a new book about a month ago. It launched on Amazon. It's called I got to put it on my face here, but it's called The Blueprint and an insurance agency's unconventional rise to the top. It's really geared to P&C agents, CSRs. I feel like a lot of the strategies that I had to deploy in our agency with marketing and offshore back office and my experience creating programs with high deductible insurance programs. I think an agent will get a lot out of it. And so that was my goal, is to have something that that truly, like you just started looking back on memory lane, creating that book that had to go back years, from the beginning and that I'd already forgotten about you know, to come up with it all. So I'm pretty excited about it, and I appreciate you having me on again to kind of go through all that too.
Yeah, I would love to start kind of at that beginning part. You talked about, some of the, things, the hardships and things you went through. I'm glad you wrote this. And I love that you taught the blueprint so that agencies can have that blueprint and have kind of like, old Uncle Eric to ask advice of and just talk through, just read through. So I guess I'd start with like, what's some one piece of advice that you wish you would have had when you started, and how can that help PNCNs today?
No, no, absolutely. I think, the way it first started, I actually had a partner in another company. We had a business divorce, and
Uh-oh.
we split the baby, and he took half the book. I took half the book. He
Yeah.
happened to take the ones that more retail oriented B2B. I took the wholesale, side of that business, that book. So that was good, and it gave me a good start. So one lesson is, again, I know a lot of agents do really well having partners, and I see all the different names on the agency names,
Oh
Smith,
yeah.
Jones, but I do, after that experience of almost having a heart attack and the stress of the legal pieces, divorcing with my business partner, I would never have a partner again. I would just prefer to pay someone very well to be my so-called co-founder slash partner,
Yeah.
that doesn't have a say in what in terms of the ownership say. So that's a huge lesson right off the bat.
You brought up, the thing, you sold, or found private equity, and what's that, partnership, as you just said, you wouldn't take on a partner, but what's that partnership been like for you as you've transitioned into, that you're still involved as a president, I'm assuming, or a CEO of some sort.
President, yeah.
And are they just kind of the money and just help you out there and like just, provide what you need, and they still let you run the day to day, or what's that partnership look like for you from that standpoint?
Yeah, totally. They luckily it's similar to some other arrangements with private equity these days, buying up retail agencies like Acrisure and some others.
Yeah.
It's been laissez-faire. They've left us alone. They just want us to keep growing the business. I happen and I went over this in the book. What caused me to make this jump was that I needed that financial backing because of these high deductible programs that I created so that I had more control over the pen in terms of the work. We specialize in workers' compensation primarily, and we specialize in alternative risk. So at the end of the story, I created a high deductible program where I was actually on the hook for $500,000 per claim, no aggregate to that. So you have to collateralize that very heavily. The story there was that it was back in 09, 2010 or so, as you remember, the hard market in workers' comp, and we started growing like crazy. It was like shooting ducks in a barrel,
Yeah.
especially with alternative risk, right? So it was exciting because I'm a sales guy at heart. I don't really, I can do operations, and I do it for control purposes, but I prefer the sales and marketing. So like it was just going great, but when you spike your growth in premium, guess what comes after that? More collateral. But when they started coming back at me, and I needed to write a check for $5 million to renew, cash right then, no letter of credit, cash. It's either I got to suck it out of my retirement plan or I better get a partner. So got the partner.
I don't talk about this a lot on the show, but early on in my early days of insurance in my 20s, um, I'm second generation. So when I left my father's agency, I wanted to dip into PNC. My first role in PNC was at a brokerage that was work comp focused. And we had it was a wholesale situation. We had a exclusive arrangement with AIG for hard to place work comp, similar to what you're talking about. And it
Definitely.
was like the 1+ mods, and so we were dealing with some stuff with hair on it. And we'd get, I mean, I saw some large mods and I saw some crazy things. And we got into some of that, high deductible stuff even back in early 2000s, but wasn't near probably as sophisticated what you're doing now and the model that you've built. But the book talks about you creating this. I appreciate you sending me a copy of it. But yeah, so the book, you kind of walk through that again in a blueprint of setting up these high deductible work comp programs. And so there's fortunately right now, work comp is in a good space. It's kind of a soft market for work comp. But if they wanted to get into this high deductible work comp program kind of thing, how could they educate their clients on that? Because that's a lot you just talked about. You unpacked a whole lot of headaches and challenges and things like that early on and throughout. How can PNC agents educate their clients on that, educate themselves for that matter, on how to get started in this space?
Right. You better be getting ready. Even though the market's soft right now, it's probably a good time to start it because you
Sure.
don't, you can get some good, clean business to get going. Number one. Number two, it is a long play, meaning you're gonna eke out margin because of this collateral and cash flow. You're gonna eke it out over 4 to 5 year period. It isn't gonna happen year one, year two. You're gonna be posting collateral, right? So you better have a great financial backing behind you. Know that it's going to be a slow play, even though you're going to have a ton of control over it because you're going to get to decide who goes in. It's not the carrier as much, although they do have a say at some level, but you're going to have a lot of autonomy, which I love. So number two, the other piece, so financial partner, the other thing that I did that was an idiotic move, and even my program manager was telling me to do this, and I didn't understand it, which is you hire an actuary to help you create the best practices of your pricing model. You think you know it because you're in the street, seeing what
Yeah,
other
you're in it every
carriers are
day.
doing,
Yeah,
but you don't know it. And there's what I mentioned, there's that cash flow piece you've got to determine. If you have some financial backing, you can more or less base things on the client itself and not necessarily have to charge that cash flow piece because you've got a bank behind you, so to speak, with your financial partner. But anyway, getting that pricing settled. So when you run that quote, that you're quoting it like a carrier, right?
yeah,
And you've got to know the loss pick. You got to know what your costs are, overhead costs, not just the premium, that loss pick and the loss development factors that are going to hit in 3 to 5 years that you are going to be funding to with that carrier with cash. You got to know those things when you price it and not go too low. I think in the beginning, before I hired the actuary, I was giving it away. And it was not, that didn't help, in terms of my collateral call with growth.
to be a little bit. It's like front end underwriting on steroids, and then on top of that, talking about some of the risk management programs you put into place, and talking about different strategies they could talk to their clients about to prevent. Because again, like you said earlier, even though it's a soft market now, all it takes is like one big claim or two, and they could be upside down in a hurry and be looking for something.
Definitely, yes. So the good news was that we in my prior company, my risk manager came with me and during the divorce. So I got I
Yeah,
got one of the best pieces to the
sure.
puzzle from a risk side. And he's one of those risk managers that was geared to helping not say, take down an extension cord or, let's get a guard on this saw. Like, that's your basic.
That's something your carriers can do.
Right, right. So what he would do is, obviously create a return to work program,
Yeah,
coming and educated the client on why they need to do it. I mean, we know why it's
sure.
important, but when you get an owner of a plumbing company that has to pay a salary to some plumber who's not doing work in plumbing, they don't get it. They'd rather, oh,
Right.
we're just going to turn the claim in. Well, no, we need to get into back to work, light duty. So he would develop that. He was developing forms for, and this was kind of unique at the time, more from an HR point in terms of hiring of what you could ask that
Yeah,
employee before you hired them. We did end up actually using like an off-the-shelf course system so we could create a training course for the supervisors that would actually have a quiz at the end, like Coursera now, right?
sure.
But back
Yeah,
in '09, I mean that was like
that
Star
didn't
Wars.
exist. Yeah,
Yeah.
yeah,
Yeah,
yeah.
yeah. It was funny. So like, and we would give the supervisors Starbucks gift cards if they would complete certain sections to get
Sure.
them buy-in to what we were trying to do and understanding of these creative approaches. I mean, he had this was funny. He had a light duty program that involved helping the clients get settled and ready for the bird flu. And this is pre-COVID, right? You never knew a pandemic would happen. So
Yeah,
And it was geared so they could actually, the doctor couldn't say no to this light duty. Even if the person's in the bed, they can look at this manual that the government provides of creating a bird flu program. Just
Wow.
basically anything about safety or, a pandemic. He created this so that the doctors had to release for light duty.
That's hilarious. Yeah. I remember, talking to agents about programs like for similar to that for like I remember when I worked for a carrier for 10 years. And one of the things we introduced years back, again, going back to, I think it was even around 10 or 11, but we introduced an app for safe lifting.
Hmm.
And I thought at the time, like, this is the dumbest thing ever. Like, why would agents ever use this? But we saw once we implemented that and had agents using that, the amount of claims went down of people. And I didn't realize, I didn't think, because there were smaller claims of people that would file claims on, their back because they lifted wrong, or they lifted too much, or they didn't do it with a team, or they didn't do it with a dolly, or a hand truck, whatever you want to call it. In the South, we say dolly. But I just again, it was a simple thing, but that one measure made a big difference in the book of business.
Absolutely. Like he designed the program where we had a nurse case manager on staff too because of the program. And, not only was she doing the triage call, right, to try to do the
Yeah.
Band-Aid claims, so that's everybody does that. But here's the cool thing he trained her to do. He trained her to call the doctor's office to get on and have a nurse to doctor conversation about the case, right, about the claim, and, nurse to nurse, nurse to nurse, or nurse to doctor. And then she would say, by the way, we have a light duty program. She would bring it up. Like that's
Oh, that's
unheard
cool.
of. And
Yeah.
she would ask, hey, we have a light duty program. Here's what it consists of. Will you release them? She's trying to close them on releasing the employee back to light duty, right? So that was going on. And our claims manager, who was just shadow adjusting claims because the carrier wanted to do it, but she would have that same conversation with the carrier claims
Yeah.
TPA to say, hey, here we got this program. As she's in, working on the communication on the claim back to the employer and to us and so on, she throws in light duty. So anyway, it was all coordinated that way, and it really kept a good loss ratio going because we were like you were saying when you started, we were after that alternative market, those
Sure.
higher mods, California, Illinois, New York, those tough states, right? Because it was
Sure.
just phenomenally fun just picking off those clients, and then giving them something to help them, also clean it up.
And I can remember, again, going back, I've been in this business over 20 years. Back in those days when I was working for this wholesaler for that short amount of time with the work comp stuff, when it was a harder market, I can remember I was not the favorite person walking into some of these agencies because back then, agents were more focused, at least where I was at in my territories, were focused more on writing with their the direct carriers, and writing with, some of the national players, Travelers, Hartford, some of that. But now, you fast forward 20 years, if I'd have had some of the stuff you've got now and even stuff we had back then, you're a hero to so many agencies. And so many agencies right now are focused on the hard to place market stuff and hard to write and stuff with hair on it. And they're not as afraid of that anymore, especially with the way carriers are doing with commissions and, paying out certain things. And when you talk about some of the programs you've got going on, so maybe some of those that don't understand a little bit more of what you're doing, if you could look at a deeper dive a little bit about what the structure of that looks like, from even as much as like charging fees and and how you handle that holistically, from pricing to that, anything you can get into without getting too deep into it, but just giving the audience a little bit of an understanding, so if they're like, wait a minute, okay, I get it now, I could do this.
Even if you have your own program, you don't want to force fit everything in that, right? You want to utilize your other appointed markets, A, just for diversification, B, you're on the hook now for the
Yeah.
liability of these claims. So if you've got a client that you figure out in a risk management call, hopefully prior to binding it, or heck, even, after, binding it, if
Right.
their attitude towards listening to common sense risk management and light duty and those things are not in sync, with what you're trying to do with your program, Do not put that client in there. Put
Do
it with
not
another
square
carrier.
peg round hole them.
Right. You got to have that. And number two is that in '09, another thing that was happening in this alternative market, all these carriers were just coming in and then getting out. And then, because I had an alternative risk book and a guarantee cost book, really, at that point, it was really hard to, replace that business. So what I would tell agents is, continue to diversify your book. If you do a high deductible program, do not force fit in. And let's just say you don't decide to do the high deductible right now. Watch out for concentration risk with your own book of carriers.
Yeah.
If you got one carrier writing a ton in this industry,
They could change in a heartbeat.
get another one if you can. I know it's tough, and you're trying to feed these markets and keep your contingency bonuses
Yeah.
coming in and all that. But do not get sucked into the vortex there, because I did, and they would pull the rug out from under me, and all of a sudden I'm in a fetal position, wondering if I'm going to be in business or not. Like that happened literally. It seemed like every year I was having to roll x amount of clients
Right. So
literally
you have to
annually.
focus on that diversification. And
So basically, the way I structured it, luckily Zurich already had the mechanics of the program in place, and they would tell you this is your pricing at this X deductible level, right? This is what you're going to pay. And they're looking the deductible piece that they would give you had to be, as usually I think it was around 10% of the premium. So, if you had let's see, if I had $5 million book of work comp that I wanted to start the program with, they gave me a $500,000 deductible. That's about the ratio that they're looking for, and you should look for as well to create it. So that's
right.
again why that actuary, you need to get an actuary like we talked about. That's a huge, if you don't do that, don't even do the high deductible program. So make sure to have that, because the carrier doesn't help you. Their interest is anything above the 500,000 level, because they know you are on the hook for up to $500,000, right? So they're not watching your back, really. I mean, they give you some underwriting guidelines, but if they tell you you can write a roofer and you want to put one in, you know, you're you're on the hook, right?
Well,
So,
yeah, they know it's going to take a long time for you to hit that 500,000. And so they're not too worried about that on that side of it.
and they're not liable for it. You
Right.
are with your
100%.
collateral, right? Normally, most clients had either, for some frequency issues, so that could be the 1,000 to 2,500 bucks or so, just to kind of make sure they think they have some skin in the game with me. At that point, I would let them know, look, I didn't tell them exactly how much my deductible was, but I would say this is our own program internally. We are sharing in this risk, with you. And that's what makes it so great, because we're a partner. I'm not just like a traditional carrier. I'm using an insurance carrier, and
Right.
I'm sharing some of the deductible risk with you.
I would also imagine, because you emphasize in the book talking about the role of technology and streamlining some of those operations. You also talk about offshoring. We'll get into that here in a minute. But, when you talk about the role of technology and looking at the data and, even, for operation streamlining, what are some practical tech solutions that my audience, PNC agencies, even some life and health agencies could use to stay competitive, so to speak?
The great news is that something that was a system that was like 30 grand to use, or 30 grand to buy, the same exact thing and even more is only 300 bucks a month, and I'm speaking now like in a CRM. Got a lot of tools already built into the CRM, and it connects to the AMS, similar to Agency Zoom and AMS 360 as an example. So I would say I would just go with, the off-the-shelf systems that are software as a service to keep your expense low. I mean, I remember around 2010, 2011, I tried to build my own CRM, because I had some offshore in India that it could do it, but it was just a nightmare. And I just ended up getting something off the shelf at that time that was very expensive. I also used technology a lot in marketing. Email marketing was my big, claim to fame, because I could reach, 80,000 property and casualty insurance agents with a click of a button. and we would get a ton of activity and submissions because of the hard market.
Yeah. Well, and you talk about this in the book. And so what are some of those strategies? Again, let's take it down to the bottom shelf here for these people. What are some of the strategies from the book? And we're going to entice them again to try to buy this book. But what are some of those strategies that they can adopt to do better at their own digital marketing or their own online or email marketing or even social media marketing for that matter?
You don't have to be an IT guy to implement. You can
Mm-hmm.
leverage off the provider's, service team, which in this world of automate, and I think Agency Zoom does a good job. One, two is I always started as with very small test. A/B testing is what they call it now, but when you're comparing things, but I did
Sure.
small tests, instead of hitting 80,000 emails, I'm going to send out 50 emails to 50 agents, see what their reaction is, and if it starts working, then I scale up, right? So I do
Yeah.
small tests first, which is great because it's lower cost too.
I've consulted a lot of agencies that'll have like HubSpot and they'll start with the starter plan of HubSpot, but you have to pay an additional amount for every thousand, marketing contacts you get. And as you build that, they keep building onto that, on a month by month basis. And they'd be like, how do I, I can't afford to go to $1,200 to the next level or 1,700 or whatever it is.
Yes, and then when you see if it works and you keep we had to just keep tweaking it, pivoting. Again, all of this is sort of commonplace in the tech world now that you
Sure.
fail fast, that whole words. But
Yeah. The whole
back in
thing.
those days, no one knew any of that stuff. You're not supposed to fail. What are you talking about? But you
Right.
want to fail, figure out what's wrong, get it corrected, and then the bigger piece. You're gonna have to throw more dollars in it, like you mentioned, HubSpot. If that's what your system you're going with, get ready to then, once you figure out what's working with those prospects,
Right.
throw some money at it to get it going now, because you don't want to just get one lead every 2 months.
Yeah. I think a lot of agencies that are listening to this show, and maybe not my listeners. We'll say my listeners are better than that. But some of the other agencies out there, they take the throw against the wall approach to see what works. And there's a lot of spaghetti on the wall, and there's not a thing's not working. And so I think, to your point, you have to pivot a lot. You have to make some of those changes, and you have to be willing to do quite a bit of that. And so you talk a lot about, and you've been able to navigate, some of these things. What can agencies do to stay, on par with the changing markets and changing things with their niches or changing pricing structure? Like in their book right now, workers' comp is super soft, but some of the other things, property and casualty driven, is a hard market. It's tough to do. And so what can P&C agencies do to keep their finger on the pulse, so to speak, and to stay on with these trends and stuff like that?
Yeah, I mean, I think I know you use it too, but like I'm getting more used to now using like Chat GPT and
Yeah.
in this. It's just a huge time saver. You got to just start small there too. I just first started on my phone and kind of use it like a Google search.
Yeah.
It was so nice that I didn't have to go to a 50,000 links, from Google to press to figure it out. It would do it for me as an overview, right? So I think those times using and leveraging those things for time savings, doing to do your research. There's also the LinkedIn has really been valuable for me with the agent community. I think allow a lot of the blue and gray collar companies like your plumbing, heating, and air, they're now getting more active in it.
Yep.
It's a gold mine. There's new tools out for that to be able to scan that, LinkedIn profiles and gather intel, creating an Airtable, which is like basically a huge Excel spreadsheet that's online that can be moved into your CRM. So you're kind of basically, if you attack that niche, that plumbing niche, you figure out from LinkedIn, from AI with Chat GPT, as many industry tools. I know a lot of agents subscribe to like Xywave and Insurance X Date. You
Or
can
Reference
now,
Connect and some of that.
yes,
Yeah.
yes, you throw all that now into your CRM. Don't just have the name, address, and phone number and email. I mean,
Oh, yeah.
yeah, you got to get more on these
Sure.
prospects, integrated in your CRM. So use these new tools that make it, software as a service we keep talking about, this inexpensive. And then obviously having someone, and this is great to pull more younger folks in the industry, and I know we're all trying to do that,
Yep.
to get someone that knows marketing, that is willing to learn it, even if they're maybe just out of school. The social media aspects, I'm terrible at that part of it. I've got to have someone help me with that. But
Totally.
my daughters know it like crazy, right? So pulling that younger generation in, assigning them as part of their role, if not full time, would be helping with this marketing and information gathering and teeing up the opportunities to contact these niches at the right time, is key. Also, on that near shore offshore thing, I used at first I was using a telemarketing group out of California to contact agents and let them know about
Yeah.
programs, right? Expensive as hell. I mean, it was, 25, 30
Yeah.
bucks an hour or something. The results were just okay, good enough to keep it going, but not phenomenal.
Right.
So we tested out a group in the Philippines because they have more of a Hispanic accent,
Sure.
call into the states that are willing to listen to that sort of dialect at that time. Again, 10, 15 years ago, people are a little less inclined to accept a call, from a voice that may not sound like they're US.
I think we've gotten to a good place with our agencies now understanding the value of some of that offshore. But me, I'm not going to let you go without talking to you a little bit about sales. I'm a sales guy at heart, former agency owner, former sales guy. I feel like I'm a sales guy for the rest of my life, and you're the same way.
Yep.
And I love the section in the book where you talked about building a sales team and your experience with building a great sales team for that matter. And let's tease them a little bit. Let's tease my audience a little bit. Tell them a little bit what's in the book and what agents should consider when they're developing their own sales team. Because right now everybody's looking not only for younger talent but for good sales talent. And talk to me about that because that was one of my favorite parts of the book.
No, I appreciate it. So we were fortunate like back then too that I could because I was trying to keep my overhead as low as humanly possible, but I would let these folks work from home. I didn't want to have a huge office with a bunch of people. I was able to locate really great talent in other states because I was
Sure.
looking for the talent, not only from an underwriters, but for sales. So we structured the pay so that it would similar to a draw. It was more of a salary, but it would decline and it would go down to a certain minimum level. So they always felt like they were still employed. Not like 100% commission producer. And many agencies do that
So
now.
there's a hybrid model of commission and salary.
Right. It just, and the other cool thing I did is we would start their pay. And I know agencies do this now because when they bring a book roll, but even if they didn't have a book of business, we would start their pay really high. Back 10 years ago, it might start out annualizing it like looking like 100 grand,
Sure.
and then monthly though, it's declining. And
As their book, organic book, is growing.
right, while they were placed with commission. But what it helped me with is like the first 90 days, they're annualizing like a monthly 100 grand. But then all of a sudden, month four, that thing's dropping like a rocket, now you're making 5 grand a month, 3 grand a month, 2 grand, quickly dropping. But I was able to attract people who needed that 90 to 120 days of making 100 grand to move over if they weren't rolling any kind of business with them, which they usually
Yeah.
didn't. So
Yeah,
that
I like that. I've seen that quite a bit, and there's companies out there now. For example, I'll throw a shout out to a former guest, Pi with Adam Bowie. He was created this whole company about with the idea of agencies selling off little slices of their agency, and so might be able to come in if you're looking to attract a producer, hook up with Pi and Adam, and maybe buy a small sliver, a niche, or just a personal lines book, or maybe even a small sliver of a commercial lines book from an agency. Bring that in, bring in a producer to manage that book, kind of have that sliding scale like you talked about. As their organic book is growing and they're prospecting and getting that book, getting a pipeline going, then the commissions on that other book is dropping and it becomes more of a house book. Or it just rolls into their book at renewal, commissions or whatnot. So, yeah, I think what you're talking about there, it's a good idea, and I loved reading some of that in the book, and I love what you say there. And again, it's just a for real blueprint, and I love that you wrote this book. I think it's timely, And I almost wish you'd have left that book in front of your face. Such a pretty book, way better than looking at your ugly
Yeah,
mug. But you
exactly. I got
know,
to put it back. Yeah.
yeah, there you go. No, I tease. But just as we start to wrap up, which I can't believe we're already at that point, but a couple of things real quick. How did you balance, the innovation with maintaining that trust and integrity of clients? And what can they expect, from their insurance agents? And like, how did you manage all of that?
Yeah, I mean, really, the good news for me is that our clients were the insurance agent, right? So they had the relationship downline
Sure.
with clients. So what I had to do was build that trust with the agent, let them know the good, bad, and the ugly. I let them
Is there a
behind.
lot of hand holding in that too?
Oh yeah. Yeah, I let them know, all the scenarios of let's say that the reason why I would put them in my high deductible program or the reason why I wouldn't, more importantly, and that why we would want to try this market instead because of whatever varying reason. So being very transparent early on with the agent, even if it made them angry at us, it was really helpful in building that trust and getting the integrity going. And then that flows down all the way to my sales team and underwriting teams, right? Because they see me doing it and my upper management team doing it as well. So that was great. The other piece that I like to do was I try to get my team to be very happy, not only with the pay we talked about, but because I was using a lot of near shore, like we at one level had probably 50 full-time people in India doing all our back office work, right? Submissions, so that my underwriters and sales teams, they weren't going in and entering stuff into
Yeah. They
CRMs
were
and
focusing on
portals.
building relationships, and they were
Exactly.
focused on doing the fun stuff and the stuff that matters to insurance agents. And
Ex-
that's the same thing that I preach. And it sounds like, throughout your book, you preach of let some of that offshore help or let some other people come in, or even AI for that matter, handle some of the day-to-day tasks so that they can focus on what they want to be doing, which is, maybe getting out and doing some networking, or maybe just talking on the phone a little bit longer. Maybe when that person calls that maybe wants to bitch and moan about their rates or has a complaint about this or that, instead of having to rush out the phone because you got so many other office things you got to do, now you can spend time to sit there and listen to them and to be able to be that consultant for them and talk them through whatever. Or just like I said, just sometimes you just need to listen, but you have more time for those things because you're using, whether it's generative AI or offshore or nearshore or, a cover desk or a VA company or whatever it might be. I love that.
yeah, and they weren't speaking directly to a client or an
A
agent
client,
either.
right?
Yeah,
They
and
do
they were
have client
behind it.
facing people, but yeah, I think you're right. I think it's a good move to let them,
So creating
spend
that
the time.
environment of they're working from home, which was very rare, 15 years ago. So they can say, wow, this is phenomenal because they can control more of their lifestyle right that way. Even underwriters and admin teams were all working from home pretty much. So a lot of agents are very weary, I think, of maybe offering that still, even now, just because you won't have everyone collaborate in an office. But I think if you do find that right talent, in my opinion, it is okay to make that hiring decision out of state, for that whatever role that may be, in sales, underwriting slash claim account management
Yeah,
in the retail side. So getting these folks happy with their environment, with that they're not keying stuff in to get quotes done. And even my sales team, all they would do is forward an email over to a mailbox and it would all be entered into the CRM for them. It's even the notes about the client. They didn't have to go in and enter anything.
right.
I didn't want them to do. I wanted them on the phone talking to agents.
100%. And same thing with PNC agents talking to their clients. So yeah, I think I think there's a lot of agencies that are doing that now, but there's still a lot that are not. And so I think it's smart.
In that lead gen, whatever the model, and I've been talking to some other agents recently that are younger folks, especially that have been put in the bullpen to take in the digital marketing leads coming from the Google, do these new
Yeah,
portals now that like Bold Penguin, they give you the lead and the rating tool all in one
sure.
system. So they're managing that now, and they just sitting at their desk and learning how to one call close, kind of like Ryan Hanley and those guys, knowing how to do that. So yeah, the lead gen for the PNC agency is getting better for the retail
Yep.
guys, and then when I had a marketing, crushing it, I was covering up my sales team. They didn't have time to breathe, even when I had the back office helping them, right? They
Right.
loved it. They weren't out hunting. So I think making them happy at a PNC and retail agency side and giving them that environment, giving them that luxury of time in terms of the back office pieces, getting a good system for marketing, getting them so they don't have to completely do it all on their own. It does
Yeah.
make them a little lazy, I got to admit. I mean, my team got a little lazy toward the end there, but that declining base helps, a lot.
Sure. Yeah, yeah, yeah. Because then they're motivated. So talk to me as we wrap up. What's next for you? What do you got going on? And then a follow up to that, if you can remember, is just to dive in a little bit about how they could find the book, what the exact book title is, and then what I'm going to tell the audience today is I'm going to go ahead and buy 5 of those books, and the first 5 people that email me requesting that book, I'll send it to you for free. And then anybody else that wants to, I want you to give them those 6 through 100 that reach out, that missed the free one. How can they get a hold of the book? Do you have a website they could go to, an email address that could find you? And if they want to connect with Insured Solutions, tell them that too.
Absolutely, I appreciate it. No, and hey, I'll match you on that. If you, let's go over to 10. So we'll give 10 books out. And actually, I'll cover the whole 10. I don't need you paying for that. So I appreciate you having me on. So I'm happy to do it.
So
So
email me, Heath at Insurance Town Podcast, and I will, we'll get those to you. The first 10 people that send, I'll buy 5, you buy 5. We'll go from there.
Okay, that's perfect. So, and then as far as reaching out, insurance, my best info is the easiest thing. I do get a copy of that. Info at insuredsolutions.net is the easiest way to reach me there. And the book is on Amazon. It's called The Blueprint. I always have to read it. An insurance agency's unconventional rise to the top is so the blueprint, the insurance agency's unconventional rise to the top. And it will again all about my journey. The first half of the book more or less covers sort of my background and why, and I felt like I needed to create this agency, what led me to do it for my upbringing. And then the second piece would be more literally a guidebook for PNC agents on how to implement some of the things I did that I felt like were successful. And then as I keep admitting here on the call, I admit my mistakes too, and to say,
Yeah.
don't do this, have a financial partner, but get an actuary, those tools to say, this is where I screwed up. And don't follow me on that one, right? And then and then finally at the end. And then as far as my future, my goal will be to stay on in terms of insured solutions and continue to help find new creative alternative markets for our agent in community, and utilizing sort of the book and some other things I'm doing, to I don't know, make that a stronger relationship with our carrier partners so that we can roll that down and just try to figure out some of the new technology that's coming out even further, kind of learning from what happened in the past. Like email marketing doesn't work as well now because everyone's doing it, right? So it's newer ways to reach out and get leads, like we talked about on the PNC side. I'd like to continue to learn how to reach agents and help them reach their clients, and even come up with some cool strategy where we give leads to agents, too.
Yeah.
So to help their book of business and just ask that they give us sort of a first right of refusal in some of our markets. And if it's not a fit, use your own markets, let's just be a partner. So I want to use some ideas that are creative and I can put on autopilot and on steroids like I did before, because the email marketing game is tougher now.
It is. And so I just found the book on Amazon, and you've got looks like a hard copy or a hardback, and then you've got a ebook version of it, maybe
Yeah, it's
the
Kindle, but
Kindle
you can really
version,
it's digital,
and the
so it's digital.
paperback.
Yeah, and a paperback. Yep, digital copy for those that like to read on their iPhone, iPad, Kindle, or Android, and then you've got the hardback and a paperback.
Yeah, like I said, I just found it, so I'll put a link to that in the show notes and go from there. Yeah, it's a good looking book cover. I think it's going to be a great resource for you guys out there that are listening. Again, thank you guys for being here, listening to him. Thank you so much, Eric, for joining and for being a part of Insurance Town today. And I look forward to seeing how this goes, seeing the emails fly in and people wanting the book. And I'd love to have you back on some other time and just follow up and see if you got another book up your sleeve or something else going on.
Yeah, you never
And
know. I now when I tell people I've got my first, I've just launched my first book. I always say first book, like it's going
yeah,
to happen again. But this was a pain in the neck, man. I can't do it for a while.
no, I get it. And I was looking at, I was like, man, it's like 120 something pages, and so it's not like some little like leaflet of like 25, 30 pages. This is like a real deal book, man. And so
Yeah, yeah, it was a labor of love, they always say, but I had a lot of help. Thank God for ghostwriting.
yeah,
I needed. I don't. My ADD kicks in, man. I can't get past a few paragraphs. So
I get it completely. Well, man, you and I'll keep up with you. I'd love to hear more about how things are going in Florida, and maybe come down and see you sometime. And
sounds good.
I appreciate you, brother, and you have a great day, man.
Thank you very much.